Hi, I'm Keon, a Senior Research Analyst with Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, September 19th. We'll start this week's report by taking a quick look at the market activity for the week. The Dow Jones Industrial Average and the S&P 500 Index were up 1.6% and 0.6% respectively. Both of the indices were able to overcome the escalating trade tensions between the U.S. and China, as each country imposed new tariffs on the other and promised there'll be more in the future if required. Something to keep an eye on next week is the upcoming Federal Reserve meeting. It's expected that the Fed will raise interest rates again next week, but also there's speculation that it's possible the Fed may take a more hawkish stance on rates due to the recent strong economic and inflation data. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at the macro groups, what they did for the week. Equity mutual funds saw net outflows of approximately $1 billion last week. Taxable bond funds took in $1.1 billion in net new money. Muni Bond funds had a small net inflow, approximately $105 million. And money market funds saw net outflows of roughly $19.5 billion. We're going to take a closer look at each one of the fund asset groups now. We'll start by taking a look at the equity mutual fund group. As we just mentioned, they saw net outflows last week of about $1 billion. It was their 13th straight weekly net outflow and brought their year-to-date net outflow to just over $27 billion. In this week's activity, we see non-domestic equity funds being responsible for all the net outflows. They had $1.3 billion leave their coffers. Excuse me, I had that wrong. Domestic equity funds were responsible for all the net outflows, not non-domestic. Non-domestic actually took in net new money, about $257 million. On the non-domestic side, global equity income had the largest net inflow, about $590 million. And on the domestic side, large cap core funds saw about $500 million leave their coffers. Moving on now, we'll look at the equity ETF group. Net inflows for this group last week, they took in $2 billion in net new money. It was their 9th net inflow in the last 10 weeks. And their year-to-date net inflow is now just short of $88 billion. Major contributors to the net inflows last week was the SPDR S&P 500, $2.7 billion in net new money there, followed by the Healthcare Select Sector SPDR, which took in $431 million. And on the flip side, the iShares Russell 1000 Growth Index ETF saw about $641 million leave. We'll move on now, take a look at our taxable bond fund groups. We'll start with the mutual funds. This group had net inflows last week as well, about $1.1 billion, pushing their year-to-date total net inflow to just shy of $67 billion. As we drill down to the peer groups, we see that ultra-short obligation funds have continued their hot streak. They took in about $300 million in net new money, which pushes their weekly net inflow streak to 28 straight weeks. And loan participation funds also contributed to the total net inflows as they took in about $171 million in net new money. Take a look at our taxable bond ETF group now. Net inflows here as well last week. They saw $2.2 billion come in, pushing their net inflow to just over total net inflow to just over $54 billion for the year to date. Major players last week was the SPDR Bloomberg Barclay High Yield product, net inflows of $700 million there, followed by the iShares 20-plus year Treasury Bond ETF, which had net inflows of $256 million. And conversely, the iShares 7 to 10 year Treasury Bond product saw about $211 million leave. Our next group to take a look at is Muni Bond funds. This group had a small net inflow last week, about $105 million. This pushed their year-to-date net inflow to just over $9 billion. Major contributors last week to the net inflows were the high-yield Muni Debt Bond Fund peer group and the short Muni Debt peer group, which had net inflows of about $156 million and $48 million respectively. Our last group to take a look at is money market funds. As we mentioned earlier, big net outflows for this group last week, about $19.5 billion, which actually put them in the red for the year. They have net outflows of just about $19 billion for the year to date. Most of the net outflows came from the institutional U.S. government money market group last week. They had net outflows of $19.8 billion. Second on the list for net outflows was institutional U.S. Treasury money markets, which saw about $2.7 billion leave their coffers. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about the week's fund flows activity.